China's economy continues to roll, expanding 11.9% in the first quarter. But growth that fast may signal overheating and prompt a rapid response from the government. For more, let's head to Shanghai, where we're joined by Stephen Green, head of Greater China Research at Standard Chartered Bank. Steve's fourth book, The Challenges of China's Economy, was just published in Chinese in January. Stephen, is the economy overheating? And if so, how's the government going to respond?
Yes, we think so, and it looks like they're already moving again on the property sector. Measures just out today trying to force people to put more down on deposit when they buy a second house. We would like to see interest rate hikes. It looks like the winds are against those in Beijing at the moment. Fears that if you raise rates, you'll attract more hot money in. We're also looking for a renminbi move sometime in the second quarter, but probably not enough to have any kind of effect upon the economy.
Stephen, I'm just curious here. We heard from Jim O'Neill, Goldman Sachs, earlier saying he actually thinks the yen could move this week, a revaluation, and gave it a, I don't know, between 3% and 4% potential move. Obviously, you think that's too aggressive.
Yeah, we'll take the other side of that trade. We think the renminbi will start moving against the dollar sometime soon. It could be this week, it could be next week, it could be any time in the second quarter, but then moving gradually. We'll see more volatility against the dollar. The current trading band system we have is wide enough to absorb a lot of volatility, but maybe they'll still move to increase the formal limits of the band. But it's hard to see them moving a big one-off. We've got a trade deficit in March. We could have much smaller trade surpluses in the next few months, and I think there's a lot of conservative feeling about what's going to happen to the US in the second half of the year as well. So I think they'll take it slowly.
Stephen, there are a couple of points I want to pick up on there. You talked about how property taxes of some sort are unpopular, no surprise. The government doesn't want to hike interest rates, and you don't think it's going to move on the yuan until the second half, or at least later this quarter. So what options does that leave the government? And if it doesn't do one of those three things, does it not run the risk of hyperinflation?
There certainly is. I think the risks are on the upside for inflation at the moment, particularly in the property sector. What we have seen, the biggest thing we've seen so far this year is quantitative limits on bank lending. They're just beginning to bite. So the informal lending rates down in Wenzhou, on the underground banking market, they've begun to rise. It looks like property companies are going offshore looking for private equity, issuing bonds, because they're a little bit afraid they won't be able to get capital or credit from the banks. So that credit limits, they're just going to bite even more as we go through the year, and I think that's really what the government's going to be relying upon to prevent overheating. But as I said, I think we really do need a little bit more.
Stephen, very quickly,
the risks are that we do have a little bit more inflation.
Stephen, you said that there's concern over there about the second half performance of the U.S. economy. The signs that we've got so far from Intel, from UPS, from CSX, the railroads, suggest that, if anything, corporate profits here are rebounding faster than people expected. What is that going to mean for the Chinese analysis?
Well, I think they'll probably sit and wait to see how sustainable that is. If you've got consumer confidence still pretty low, unemployment still pretty high, you could even see house prices. We believe house prices might have more to fall in the second half of the year in the US. And I think after being surprised in 2007, 2008 by the depth and seriousness of the US crisis, I think the Chinese leadership are probably still waiting and looking, and they'll wait to be convinced, I think, on that.
Stephen, thank you very much. Stephen Green on China and GDP. He is with Standard Chartered Bank, head of Greater China Research.